Hi guys, so we are starting another tutorial here. We are starting another class. So as I always say, if you have a question, post it in the comment section. If you have a question, post it in the comment section. So as you can see this candlestick chart, as you can see this candlestick chart is a very clear, it's a very clear chart. It's a very clear chart. It's a very clear chart that is showing you the direction of the market, showing you the direction of the market, right? So as a trader, you need to do something we call uh, technical analysis or fundamental analysis for you to for you to determine for you to determine your area of value where you can do what you can place your order, where you can place your trade, right? Where you can place your trade. So I'm just doing a recap because I've done several videos that were explaining most of the concepts that are used in the forex market. I've done several videos explaining so many concepts that are involved in the trading market, right? So guys, as you can see this chart here, I have a running trade. I have a running trade here. This is a running trade, and I want to explain to you why I took this trade. I took this buy trade, right? Why I took this buy trade. So as you can all see, this trend, this trend is doing what? This trend is falling, right? This trend is falling. Why is it falling? Which direction is it taking? It's falling from the highest from our major swing high, going down to our major swing low. Guys, if you don't understand terms like swing high, swing low, you can comment in the section so that I can explain for you what they are. And I want I want to add some knowledge somewhere. You see, like let me pick a candle here. Let me pick a candle here. Like you can see this candle here. You can see this candle, this this green candle, guys. This green candle has a very long stick. This candle here has a very long stick. This is a very long stick, and it has a body at the top, right? So what is the psychology behind the formation of this candlestick, or what is the anatomy involved in the formation of this candlestick? You can see that the the price the price opened here. The price opened. The price opened. The price opened. The price opened on that candlestick. The price opened here. The price opened here, guys. Then that price. Remember, the price opened here after the price closed here at this previous candlestick. So I'll explain to you how these two candlesticks are called, right? I'll explain to you. So when the price opened here, the sellers came in and pushed this price down up to here, right? That's why we are having a very long stick up to this area. That's why we are having a very long stick up to this area. And how many pips was the price moved down? How many pips were the price moved down, or how many points? The points are the price moved from here. Price moved here from here up to here by 7,000 by 7,458 pips, 450 459 pips. So from here guys up here, it took 7,459 pips, right? Then the buyers came in from here. The buyers came in from here. Then they pushed the price. they pushed the price back, right? They pushed the price back up to up to up to up to here, up to here, right? The price was pushed up here. The price was pushed up here. So you can see that the total the total price movement in this one candlestick formation was 2000 2000 2000 2000 2812 pips. 1812 pips. So this candle is normally called the body, the green part, the big bar. The big bar is called the body, and then this stick is called the wick. The stick is called the wick. So it took. Let me explain this concept in a way that is very simple. So the buyers, as they came in, the buyers came in here, but sellers pushed this price up to here. The sellers pushed this price up to here. Then buyers then again came in and pushed the price up to this area, right? That's where the 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 price was closed. The price closed here. The price closed here, right? Then we had another opening here. This small red candle that you are seeing. So this was the opening. Here was the opening. Then this was the lowest the lowest point. The price got us while we were in that market during that candlestick formation. This is the lowest price. This is the lowest point or the lowest price it got us while we were trading that market during that week, right? Then this is the highest point the price got during that week, or during the formation of this candlestick. So this candlestick, we normally call it a what? A hammer candle. Normally call it a what? A hammer candle. A hammer candle is just a candlestick that is giving you a signal that the price is about to do what? To appreciate and get higher. The price of BTC, for that reason. The price of BTC is about to appreciate and get higher. So that is the psychology behind the formation of this candlestick. When you see a candlestick like this, which is a green in color, it is giving you a signal that you should prepare to to press the buy button. You should prepare to press the buy button, right? You should prepare to press the buy button. You can see, guys, after the close of this price, we had so many bullish candles, right? So that is the psychology behind the formation of this candlestick. Then I have another candlestick here. This one, right? Let us talk about this one. This candlestick, normally call it a shooting star. A shooting star candle. This one here, this red one. This red one is normally called a shooting star candle. Why is it a shooting star candle? Because you see the opening of this candlestick, the opening of it, the price opening of that candle was where? Was here. The opening was here, right? After the closing price of this one. So the buyers came in. The buyers came in and pushed this price. Pushed this price up. They pushed the price. They pushed this price. They pushed this price up. They pushed this price up to this area, right? Up to this area. The opening was here, but the price was pushed up to here. Then the sellers came in. The sellers came in and they rejected the price. So after the price rejection, the price of that asset, it dropped again. Up to here, right? Up to here. That is where it closed. And this candle, guys, is giving us a signal of selling pressure. This candle is giving us a signal of a selling pressure signal. Why is it giving us a selling pressure signal? Because as we can see, the price were was getting lower. The price of this asset was getting lower as the buyers were doing what? Were rejecting that price, right? The buyers were rejecting that price. So remember, we are explaining concepts to do with the supply and the demand. So the price rejection was happening here. The price rejection was happening here. That's why we are having a very small body at the bottom of this candle. So this stick that is looking long here. This stick here before the closure of this candlestick. This stick, we normally call it a wick. A wick. So this is now a wick. Starting from here up to here, this stick is called a wick. Then this is the body. You see, this is the body. So this here was the opening. This is Here was the opening of the price. Then this is the highest point the price got us in that market during the formation of that candlestick. And here, down here was the lowest point the price got us while we were in that trade during the formation of that candle. So that's now the psychology behind the formation of that candlestick. Please, you can put your questions in the comment section. So let me explain another concept here. Let me explain another concept here. Concept. So let me pick this candle here. This candle we normally call it, let me pick this green one. This green one we normally call it a doji candle. This is a doji candle, right? And a doji candle, it normally tells us some stories. You see guys, all these candlesticks, they're giving us a story. You see, all of them, they're giving us a story behind their formation, right? All of them, they're giving us a story behind their formation. Like this candlestick is also giving us another story, which is very different from the previous one that we were discussing here. This hammer candle, So, what story is this? What kind of a story is this candlestick giving us, or what is the psychology behind its formation? This candle, guys, as you can see, it opened somewhere. The price opened here. After the closure of the previous price. The previous price is this one. The previous price closed here, and the price here you can see is 99,849, 99,849.12. So that's where the price closed on this previous candle. So after the closure of that previous candle, after the closing of that previous candle, this one opened. This one that I'm calling it doji. You see, then the price moved down. The price was pushed down, or the price was rejected. The price was rejected up to here. You see, the buyers refused to buy that asset. Then the price was lowered up to this area. What was the price now? What was the price then? The price was 93,979.94. After the rejection of that price, buyers came in. Then pushed this price, up to this area. You see, pushed this price, this price up to here, right? Up there. Push this price up to here. You see, they pushed the price up to that area. Then what was the price then? The price was 104,495.55. So then the price was again rejected. The sellers then came in and pushed this price and pushed this price up to this area. You see, up to this area. So guys, as you can see, this candle, it's looking like kind of we have a balance in the price formation of it. We have a balance in the price formation of it. How? Because we are having a body in the middle of this of its swing high and swing low, right? This is the swing high. This is the swing high of that candle, and this is the swing low. You see, the swing high The swing high, guys, is the highest point the price got us during that trade, right? That is the swing high. Then the swing low is the lowest point the price got us. So you can see that this body is in the middle of this stick. Is in the middle of this stick. So here we had a very strong, we had a very tough tug of war, right, between buyers and sellers. So you can see that nobody won this war. You see, nobody won this war. Buyers and sellers, they all came out draw, right? They all came out draw. Why? Because as you can see, the price movement of this price was done what was almost balanced. So sellers sellers didn't win this war. Even buyers didn't win this war. Sellers didn't win this war. Even sellers and buyers, nobody won this war, guys. That's why we are having a body in the middle of this swing high and swing low. So that's the story behind the formation of this candlestick. That is the story, and that is the I can say that is the psychology. That is the psychology behind the formation of this candlestick. So we normally call it a doji candle. And guys, a doji candle is a very tricky candle. You should not use it as an entry, as your entry reason, right? We don't use doji candles as our entry reason. We normally use either a shooting star that is giving us a bearish pressure, or we use a hammer that is giving us a bullish pressure signal. So what kind of a candlestick should I talk about? And remember, guys, you don't just buy from the middle of nowhere. You just have to point out areas of value that you can you can place your orders. You have to find the areas of value that you can place your orders. Like here, yes, we have this hammer, right? We have this kind of a hammer candle. So it is an inverted stand. Guys, you cannot buy here. Why? Because we have some other factors that should come into play. We have some other condition that should play out to give us a reason to do what? To buy or sell. So let me continue. I think I've explained so many concepts that I don't have to repeat again. So like this candle here, oh, it is also giving us a story. This red candle is also giving us a story. You see, this red candle is bigger than the previous one. Is bigger than the previous one, and this previous one has an opposite color. You see, as an opposite color to this one. So this red one we normally call it a a close below candle. You see, a close below candle. Why is it a close below candle? Because it closed below the opening of this one. So this one is also giving us a signal that we are soon getting into the selling pressure. We are soon getting into the selling pressure. So we normally call it a close below candle. So when you meet a candle like this, at least here we have an area of value that we can do what? We can execute a trade, right? At least here we have an area of value. Why is it an area of value? Because of this line. This line we normally call it, a resistance trend line, right? This line here, normally call it a resistance trend line. And if the price gets into our resistance trend line, we normally do what? Find reason to execute a trade. We normally find reason to execute a trade. So that's how you do it. That's how you do it. That's how you spot your areas of value. So I was saying that I had to execute this trade. I had to execute this trade, which was a buy trade. Why did I have to execute this trade? Because I was seeing here I have something I normally call it a double bottom. So this double bottom, after its formation, it gave me an entry reason. What was my entry reason? My entry reason was this this bullish candle. This bullish candle, it normally gives us a signal of bullish pressure, right? That's why I had to click a buy button. That's why I had to click a buy button. So even before I did my execution, I had to do something called technical analysis, right? So I was finding out that this is a support area. This is my support area, and my support area, I was identifying it from this point. My support area was identifying it from this point here, right? From that point there. That's how I got to have my support area. Guys, remember I say that these structure levels you can subjectively draw them. You can subjectively draw them, right? But remember also, when you are doing your analysis, or before you execute your trade, you have to do something called top-down analysis. So top-down analysis will help you identify areas of value in a very will help you identify areas of value in a very what in a very reasonable way, in a very reasonable manner. You can see I'm drawing my structure level here. I'm drawing my structure level there, right? This is my structure level. This is my structure level of support and resistance. This is my support level of support and resistance. So sentimentally, you can see that this support level, this support level is giving me the reason to execute this trade, because here the price got here, guys. The price got here. 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 Got there. Then it was done what? It was rejected. It was rejected. It was rejected, right? It was rejected. And even I can extend this. I can extend this support level. I can extend this support level. As you can see here, we have this resistance area that is coming into my support level, and doing what? And turning this support level, turning the support level into what? Into turning it into a resistance line. So the price got here, then we had a pullback. We had a pullback, right? Not a pullback, we had an impulsive move. 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 We had an impulsive move, right? We had an impulsive move. Guys, please, just a minute. I'm trying to struggle to draw this impulsive move. We had an impulsive move. So our impulsive move started from this major swing low. Started from that major swing. This is my major swing low, right? This is my major swing low. Then this I can identify this as my major swing high. This can be my major swing high. This week here. This week, guys, can be my major swing high, because I'm seeing two candles here that can qualify me to identify this fall as a pullback, right? I'm seeing two candles. Remember I explained in the previous video that for me to identify a pullback, I should have at least two two candles that have opposite color, to the previous one. You can comment in the comment section if you have a question. You can comment if you have a question about pullback and the impulsive move formation. You can ask the questions in the comment section. So you can see that this is how we identify the trend, right? That's how we identify the trend. So this market was trending up, right? Right from here, right from this area, right from this area, right from this area. This market was doing what? Was trending up, right? This market was doing what? Was trending up. So from that area, from this support area, we had, from this support area we had a what? An uptrend market. We had an uptrend market. We had our uptrend market, right? So this is my major swing high. This week here is my major swing high. That week is my major swing high. That is my major swing high. And that is my resistance area. That is my resistance area. Where is my support area now? My support area is here. That is my support area, which is breaking this, which was broken. This support area was broken. This support area was broken by this impulsive move. Was broken by this impulsive move. You see, because this is a pullback. These are here we have an impulsive move, a pullback, impulsive move, a pullback, impulsive move, pullback. You see, so this pullback headed to break this, headed to break this support area. Then it turned into a resistance at this area. So that here we had our resistance here. We had a resistance here, right? So guys, technically that's how you analyze your candlesticks chart. That's how you analyze your candlestick chart. So for me to find my valid area of entry, I had to use this support area because the price got in here, then we had a bounce up. So that's why that is the reason that pushed me to do what? To execute a buy trade. Then I went to the lower time frame. My lower time frame is now 1 week. My lower time frame is 1 week. So my top down analysis, I started my trend and structure analysis in the higher time frame, which is a monthly time frame, Then I moved down to my weekly time frame to find an entry. I moved down to the weekly time frame to find an entry. And what were the reasons that made me get an entry reason? Or what technical factors did I consider to identify an entry reason? My technical factors, I had to see either double bottom or a candlestick pattern, maybe a hammer candle or an engulfing bullish candle, right? So guys, as you can see, my stop loss is here, right? My stop loss is here. This is my stop loss, and in this trade I've not set what? I've not set my target. So my target definitely will be here. My target definitely will be here, which is the previous resistance, area, here. So my target should be at 82,424, 82,424, 82,424, 82,000, 82,424, 82,000, 82,424. That is where my target is, right? Yeah. So guys, as you can see that I have I have trades that are running here. I think I explained the concept behind the running of these trades. I explained about balance, equity margin, free margin, and margin level. If you have a question about what is happening here, you can ask me in the comment section, right? You can ask me in the comment section. So guys, I think up to there, I've done at least I've explained at least something, right? So please let us meet in the next video as I do what as I explain more concepts. Let us meet in the next. I think I explain about position sizing, explain about pips. I explain about if you have a question about pips, I will still do another video that can uh, can do what can teach you more about pips. But let us stop here, guys, and meet in the next video. Also, the exchange rates and leverage, I also talked about them, guys, in the previous videos. So please let us meet in the next video and learn more about the about the concept creation in the forex trading market. Let us meet in the next video.